Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 22nd of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at CTM The Bigger Picture.substack.com, and it's published on YouTube after a delay of a week. All right, great. Okay, we have seen I've done it after the open today, so at the moment ES is down 17.75. And Brent crude is marginally down over the weekend, and CL marginally down as well. Nope. Well, okay, marginally down at the moment. Just flick to marginally up for a moment there. All right, let's have a look at where we are. Now, we had a whole load of buy signals on Friday. Those did not fare well. Generally speaking, there's going to be an extremely good indicator that we would see some kind of rally. We didn't get it, and that is an indicator that we have a very strong directional market. So we didn't lose the 6-minute buy signal on ES. We lost the one on NQ. We didn't have one on RTY. We've still got the one on YM. We are possibly going to lose the one on DAX, but at the moment it's just survived. We lost the one on ESTX, and we lost the one on Nikkei. That's not encouraging. I also had a whole load of matching buy signals on the cryptos as well. Let's have a quick look at those. Bitcoin, that one failed. I think the other ones have survived, or at least they had last time I looked. Yeah, we've still, the one on Solana is still hanging in there, although it may well be in trouble. And we really came close to losing the one on Ethereum. In fact, I think we might have done so. Hang on, bear with me a second. But basically, we had a whole load of buy signals. No, that's still hanging in there. We had a whole load of buy signals and about half of them failed. That's not encouraging. Now, I've got more to say about where we are in terms of targets and support levels, but for what it's worth, we had a strong day down there. We had a bit of a rally at the end when Trump came out with some news talking about, I don't know, something or other that was optimistic about peace, refuted about an hour later, obviously, contradicted every time he was spoken to in the next 2 days, probably. So in the meantime, we have not a lot of positive divergence here. A couple of fixed buy signals, which aren't particularly encouraging, but the interesting stuff lies on the bigger picture. So let's have a look at the bigger picture charts. Okay. ES, I'm not wild about this in terms of, sorry, although I had changed it, so it was at 6 months, but obviously I haven't saved that properly. I'm not wild about what I'm seeing here in terms of the amount of data I've got on the June contract, but I'm working with what I've got. So not an awful lot to see there, no obvious trend line. On SPX, we made the initial head and shoulder target, which I had in the 65.40 area, and we also made it to the big support level here at 65.22, which is the possible head and shoulder neckline. So as we've reached a point lower than anything we've seen since last September. And this is a potential head and shoulder neckline, which I've been looking at as something which we might see a bounce on. Now, we did see a very, very large spike here, but you can notice that some of these spikes are really just OPEX signals. Here we've got one towards the end of 3/4 of the way through March, OPEX, 3/4 of the way through December, OPEX, 3/4 of the way through September, OPEX, and a smaller one here for the OPEX here. It's the other ones which are more interesting, and we haven't actually seen many of those lately. And we have got another one here for March OPEX last year. So I don't actually read an awful lot into that, although this was a pretty high spike. What I'm more interested in is whether we're going to find support here. Now, one thing what I've been looking at is the weekly chart. Now, here we're testing quite an important level, and you can see it's quite an important level. It's the 50-week moving average. Now, this hasn't been tested since we broke back above it in May last year. We have held the daily middle band, we've broken that, we've come down to the 3SD lower band, and we're testing the 50-week moving average. You can see from the chart, this is quite often an area where moves end. Not exactly necessarily, this one went a little below it, but you can see in downtrends, this tends to act as resistance. resistance there, broke above, broke below, and then broke above. It's a significant support level, and I'm watching it to see whether we get any support here. So we haven't broken that yet. I'm watching that with great interest. In terms of the SPX daily chart, we made the full sell signal. I'm sorry, I haven't marked that up yet. So that goes back to no current divergence because we have made the target. So I'm that was just really a hangover here. I was mainly watching the head and shoulders, but the head and shoulders, I am wondering if we might see a bounce here to see to develop a larger head and shoulder pattern. Not much sign of that yet, and I got to say, the news from the war, which I'll be talking about, is currently not particularly encouraging. We did have a possible RSI 5 buy signal brewing here on the daily, and we lost that on Friday. On the hourly chart, we've got a possible RSI 5 buy signal brewing. Not really a lot else. That daily RSI 5 buy signal, I was sorry to lose. That would have been useful if we were going to have a rally. In terms of patterns, I've been looking carefully, and I'm not seeing anything particularly obvious. Looking at Qs, we've broken down below the 200 DMA with some confidence. Again, that's the first time since May last year. On the Qs. We've got a double top here, which I've been watching to see if it broke down, and it's now broken down. Now it's broken down with a target in the 523.28 to 523.69 area. Do I think that target is doable? Yeah, I do. So it all depends what happens in Iran. I mean, I think what happened here was that Trump went in, he had Iran last year, and he had Venezuela, and I think he kind of got used to the idea that you go in, drop a load of bombs, cause trouble, and no one would shoot back. And obviously that isn't always the case when you attack suddenly, and it wasn't the case here. And I think he's stuck in a situation where he's really not quite sure. He'd like to find an off-ramp, but I'm not quite sure. But he doesn't want to look weak. That limits his options. Iran at the moment is refusing to even talk. And he's saying, oh, well, Iran wants to talk, and, I don't want to talk to them. Actually, the opposite is the case. The US has been reaching out to Iran, and Iran's been refusing to discuss it. There's various performative things happening at the moment. They lifted Iran sanctions on Iranian oil, which is basically all on the way to China, and I think they were thinking that might mean they might sell it to someone other than China, but China is their ally. I think that unlikely they're going to be diverting that to Japan or something. Japan is apparently talking to Iran to get to make sure they know that they're nothing to do with this, and to get a pass for getting their oil through the Strait of Hormuz. And Japan have been pretty open to that, and they're talking about that with India as well, and will probably allow it, but we will see. But the real question here is whether we're going to see escalation. And also, at the moment, the Iranians have closed down the Strait of Hormuz. There were blistering threats coming from Trump this weekend that he's going to wipe out all the power plants in Iran. There's a couple of issues with that. One of those big power plants is a nuclear power plant, and you really don't want to see that bombed. This is the kind that could cause a really major nuclear accident. And the second thing is that the Iranians turned around and said, if you do that, then all targets are on the table, including desalination plants and any oil infrastructure owned by your allies. Now, I was talking to a friend of mine in Dubai, and actually cleared up something I'd been asking about, which was, are the US using their bases in the Gulf to launch these attacks? And apparently they are not. They've not been allowed to. They've been launching them from like aircraft carriers and so on. So the question is why the Iranians have been attacking their Gulf neighbors. And actually the answer is a very simple one. In this sort of war, the only thing they can't obviously defeat the US military. So the only way to deliver a really serious defeat to the US here is to attack the US allies in the Gulf and to cause what is in their power to deliver, which is a major oil crisis. And make no mistake, I mean, it might be that the Iranians are going to, surrender tomorrow, or, they'll have to lose another part of their leadership and they'll give up. But at the moment, there's no sign of them doing that. And could they shut down both the Strait of Hormuz and the Red Sea? Yeah, they probably could. And if they do that, is there going to be major disruption to the world economy? Yes, there probably would be. Is that what the Iranians want? Yes, that is the target of what they're doing here. And could they cause a major disruption here that could, spike oil levels to new all-time highs, even by inflation adjusted oil over, Brent crude over $200 a barrel, maybe CL as well. Yeah, they could. And actually, to a certain extent, we're actually much of the way there. I mean, when we're looking at the CL price at the moment, we're seeing it at $100 or something, but apparently that is really disengaged from the that's really disengaged from the actual price that the that tankers are loading up with. If you're loading up Brent crude in Iran or whatever it is they're selling. So if you're loading up on that, I understand that's between $140 and $160 a barrel here. Apparently, the futures have diverged from the physical price because of the amount of Russian oil over the sea and stuff that's being absorbed. But actually, when that catches up, which it is likely to, unless the war stops, then there's going to be a problem. Could Trump just declare victory and leave, telling everyone they should thank him for doing a great job? Yeah, I think he could do that, but I think the problem is I don't think it would bring down prices an awful lot, and well, at least not initially, and it would feel like a defeat, and I think he would look like a defeat. He'd say it wasn't a defeat, but I think he would feel that everyone thought it was one, and really it would be. This would be the end of a campaign that should never have started. And actually, I mean, they're talking about, all they have to do is restrain them from having a nuclear weapon. And the fact is, in Trump's worldview, obviously oil is going to rule forever. But in practical terms, I'm going to write a post about it. But I mean, the fact is that solar power and wind power are both now cheaper than any fossil fuel. And that is, given that's the case, we're in the process of a transfer, not in the US at the moment, but everywhere else. We're in the process of a transfer where other sources of energy are taking up the most of the pressure from increased use of energy, and nuclear is coming back to. And actually, in 20 years, I'm not sure anyone's going to care if the Strait of Hormuz is closed. So, I mean, really, it's just a matter of containing Iran until it becomes largely irrelevant. But at the moment, they've got a lot of leverage over the world economy, and this could actually go really, really badly. And it could cause a major crisis, an economic crisis across the world. Oil prices huge, inflation coming back in a big way. And remember, when inflation took off last time, there was a huge, there were other reasons for it, but one of the reasons was there was a big oil shock caused by Russia invading Ukraine. That was the reason for the oil shock in 2022. In February 2022, Russia invaded Ukraine. And that was the reason for the oil shock, and the price peaking a few months later. We could see an oil shock considerably bigger than that from this. I mean, really, Russia's just a bit player compared to the Persian Gulf. It's furthermore, if the America keeps escalating, then we could actually find that the Iran starts knocking out desalination plants, and much of the Middle East becomes effectively uninhabitable. A lot of oil production stops. Some of rebuilding some of these things. I was looking at, I've been reading up a lot on this, but if you start knocking out refineries take a decade to build, many billions of dollars. It's debatable whether, given the way the market is going and the switch to alternative energies, which is just paused for the moment in the US, but it's going to restart because it's economic logic. The fact is, if something is cheaper and better, then you switch over to it. That's just the way things go. So, the question is, if you're starting to build a refinery now, is it worth it? So, if we're going to knock out, if a large proportion of the Persian Gulf's oil refining capacity is knocked out and oil production capacity is knocked out, and it's going to take years to rebuild, the question is, when will prices come down? This could cause a major problem. and B, Trump's main legacy that he is remembered for. So we'll see how this goes, and it may be that everything will just clear up, and like a miracle, it will go away. To paraphrase Trump's comment about COVID. But I mean, the fact is, I don't believe in miracles really. And this could really, really go sideways bad. And if it does, we could be looking in the longer term at a very, very, very serious crash. What we could be looking at here is effectively what we were looking at in early 2020 without the happy ending. So watching this carefully. Do I think this double top, just to come back to the question, do I think this double top can make this target? Yes, I think potentially this entire rally from April last year could all be given back. So I don't have the patterns for that yet. We will see. But I would note that I've got the next big potential head and shoulder neckline on the Qs here in the 555 area, 550 area, and I will be watching it. All right, looking at the hourly, not a lot to see, bit of divergence on the RSI 5, nothing to see on the 15-minute really. Dia, now this is another one where we've got another reason I'm looking at support here is we do have, I'll just draw this in for you actually. We do have a double top which is broken down here on Dia with, and I still haven't written this in. And I think that's because it's on the hourly chart. Yeah, it is. All right, the head and shoulders is broken down with a target in the 449, 450 area. Now, there are two potential head and shoulder necklines here, because if we are going to form a larger pattern for a larger decline, then we have two head and shoulder patterns here. Now, one of them is here at 450, and the other one we're touching now in about the 455 area. Obviously, the 450 area is also pretty much the target for the head and shoulders. I think we're going to reach that, but the other possibility for head and shoulders is that we start forming a right shoulder right here. But I would say an advantage of the 451 is that not only is it where effectively the target is for the head and shoulders that's broken down already, but it's also a smaller and less long left shoulder and more modest. And if we are going to see a big decline and not necessarily a huge rally, then that would be the way to go. So that's what I'm thinking on Dia. In terms of we do still have a possible RSI 5 buy signal brewing here, but it was more impressive than when we had multiples of these, when we no longer do. On the hourly chart, again, I've got some possible divergence on both the RSI 14 and RSI 5 here. Nothing really on the 15-minute. Let's have a look at the bigger picture charts on IWM. Okay, IWM. IWM, we have a double top here. A bull flag here, which obviously broke down. But we've also got not a bad looking head and shoulders here, which I've drawn in, which is broken down with a target in the 216 area. Do I think that target's doable? Yes. I have support on the way though, at about the 227.75 area, and that is a potential larger head and shoulders as well. I'm looking at potential patterns which could take us all the way back to the April lows last year. And if this goes south, and there are many ways this particular conflict could go south, and oil prices may be elevated for quite a while, that could cause big problems. I'm just wondering, I'm getting echoes of the 1970s, which I've studied in some detail, about, high inflation and stagflation, economic problems, much slower economic growth, and I'll come to what that might mean on bonds when we get to it, but actually this is some pretty scary stuff. All right, looking at the hourly there, no current positive divergence. Looking at the 15-minute, no current positive divergence. Now, how are we looking in terms of the 3SD lower bands? We are well short of it here. The bands have expanded on IWM, and we are nowhere near it. We're only at the daily lower band. And we are touching the 200 DMA, which I've got at 240. So that's a bit of potential support there, but I'm not really looking for it to hold. I'm liking the target, which is down in the 216 area, and waiting to see if we see a rally over 257.19. Of course, this head and shoulders will fail. In terms of the others, hang on. Right, in terms of SPX, we had a pretty frisky move down, but we didn't reach the 3SD lower band either. We could potentially, if it keeps falling, see that tomorrow. We'll see how that goes. I'm wondering about a possible rally here and a backtest maybe of the 200 DMA, which I've got currently in the 66.21 area. But for what it's worth now, I think we're due a bit of a rally soon, but we're not reaching the 3SD lower band. Now on the Qs, we are reaching the 3SD lower band, and this is because of something I've been talking about, which is that as NQ has held up the best here, I mean, tech's got its own issues, but this isn't really about tech at all. This has been the Bollinger Bands are starting to widen here, but they've not really widened much so far. So we're at the 3SD lower band. Not a bad time to see a rally. The low on Friday was at 578.54, so it actually touched the 3SD lower band, which closed at 579.72. Good time to see a rally. If the news is bad enough, of course, then then it can go through anything. But I'm leaning towards seeing some kind of a rally soon. Dire, the bands are really expanding, and we're only at the 2SD lower band. We are on a significant lower band right here, and are overdue a rally. So I'd quite like to see a rally here. Tomorrow is not necessarily the best day to see it. Tomorrow is the only bearish lean day for, I think, the rest of the month. Yeah, it is. We've got a bearish doing day tomorrow, 62% bearish. And this is not an awful week for it. We've got mildly bearish leaning tape this week. So the only exception is on Wednesday. All of the days lean slightly bearish, apart from Wednesday, and Monday leans significantly bearish. So that is tomorrow. We will see how it goes. All right, great. Let's have a look at All right, let's have a look at DAX and okay. All right, DAX. We had a RSI 5 buy signal here, which I was commenting on, and that has failed. Is this a potential head and shoulders falling, breaking down? I think no. I think the problem is the comparison between the left shoulder and the right shoulder here. This just doesn't look overall like a head and shoulders, which is one of the tests of a head and shoulder pattern. So I'm not treating it as one. We will see. We have got an RSI 14 sell signal here on the weekly. That's reached the possible near miss target, and we are doing some damage to the downside, but we're not likely to be. I haven't got the 3SD lower bands on here, but we're not likely to be hitting it. In terms of Nikkei, we've still got the RSI 5 buy signal fixed there, and we've got an RSI 14 sell signal, which is fixed, of course. This is holding up a bit better. I think is possibly because the Japanese are negotiating directly with the Iranians, because that sort of kind of lets them off the hook if they can get their stuff through the Strait of Hormuz, although the Americans aren't going to be too happy about the Iranians. The Americans were talking about escorting people through the Strait of Hormuz, ships through, and actually it's the Iranians doing this escorting at the moment and charging everyone to let them go through. So I think they're thinking longer term that this might be a pretty good revenue earner, and that they might actually start charging a toll on the Strait of Hormuz from now on. We'll see. Much to be decided in terms of the war, but gotta say, I'm not too impressed with the administration's everything about this war so far, and this was unnecessary and may cause a major economic shock, which would be very regrettable. All right, let's have a look at DX. DX, this looks an awful lot like a bull flag channel. I think it is a bull flag channel. We'll see how that goes. We've got what looks like, hang on, possible bear flag channel forming on Euro. Kind of a mixed bag on the others. Could be a double bottom here on GBP. USD/JPY, we broke down and breaking up again. So I think this double top is failing. Certainly looks like that. Either that or we can make another lower low, in which case I'd be leaning towards this being a bull flag. This is leaning towards the bull side. USD CAD, no idea what's happening here. We've actually got a perfect bear flag channel here, which is not something we should be seeing really. We've also got a potential little level top here, so I'd give this as leaning towards the downside. It's kind of mixed signals. Australian dollar, still got a potential level top. NZ, this looks like a bear flag for continuation lower, which would fit with the dollar going up, but it's kind of a mixed bag overall. Let's have a look at that on the bigger picture charts. Okay, US dollar. Now, US dollar, I've been talking about. In this war so far, normally we'd be looking for capital flying to bonds, which we haven't seen, and flying to precious metals, which we haven't seen. But what they have been flying to is dollars. And we've seen a big move up on the dollar, and we've now broken up from a potential double bottom here. Now, I just want to... There's two things to say here. One, the administration is not doing anything at all to try and inspire any confidence in the dollar. But having said that, it's a very good technical setup here. It's really not bad at all. We have a lovely RSI 5 buy signal here on the monthly chart. Do these typically make target? I've got 1, 2, 3, 4. This one just expanded into a bigger signal. 5 on this chart here, and they all made target. Obviously, I have a slight lean towards this making target too. So I'm liking what I'm seeing here. In terms of the bigger picture, this is a rising megaphone. We've seen a slight break below it. I'd be looking for a topping pattern here. Now, technically, that could be the bull flag breaking down, but really, normally, I'd be looking for head and shoulders, which doesn't look close at all, or I'd be looking for a high retest. And here we have a beautiful bull flag. I'm wondering if this war could get us up to the retest this high here at 114.79. It wouldn't be the unlikeliest retest I have ever seen. In terms of the weekly chart, we've got a weak RSI 14 buy signal fixed as well. These are... Well, I don't have as many examples, so I've got 4 previous ones here, and they all made target. So I like these two. In terms of the daily chart, we've got an RSI 5 sell signal fixed. That hasn't made target yet. It might give us a little more downside, but the main thing is I'm looking at this double bottom, and I'm wondering whether it's going to follow through above 100.54. I think if it does, it'll probably get up to 104, 105. From there, who knows or dares to dream, but it'll already have come up 10. Maybe it can get the rest of the way. And that is what I'd really like to see here, because on the bigger picture, I'm thinking that we're setting up for a big decline on US dollar, but we would retest the high, go a little higher, and then it would fail with a move down, which would make more sense in terms of the current administration, but probably in terms of the timescale, might or might not actually happen under the current administration. In terms of the others, EURUSD, I have a lovely bear flag on this too. I've got a lovely bear flag on GBP USD. These are nice, and these are all supporting the dollar having a rally here. Don't know if it'll make it all the way back to the low on the pound. We've certainly got a nice looking little level top here. This looks pretty sweet. Waiting for that double top to break down, but I've got a little head and shoulders which is broken down with a target in the 1.29 area. That could get us down. That would get us down to the wedge support here and slightly below the double top support. So that could take us to the next level, which will really be down to a test of this big support level here in about the 121 area. Looking at EURUSD, we got a double top which is already broken down. USD/JPY, slightly more hesitant here because I'm only really looking for a move to retest this high here at 162, maybe go a bit higher, go much higher than that, and I start losing my rising megaphone here. Although I might be prepared to sacrifice that for a retest of the high on US dollar, but we will see how that goes. But this is a very nice megaphone, and it looks like it's topping out. Really, I'd like to see it get to 162. I wouldn't like to see it get an awful lot further. In terms of USD CAD, we have been stuck in a range for 10 years, 11 years. So we're about halfway down that range at the moment. Next obvious target would be to head down to the lows in 120. That's not a good match with the dollar going up a lot. That would suggest that we would break up. Although I would say that you could make an argument, it's not a great triangle, but it's not a bad triangle either. Rectangle. This could be a rectangle, in which case that would generally break up, and that would actually have a target beyond this high here. That would have a target in, where would that be? About the 171 area. Maybe. We will see how that goes. In terms of Australian dollar, not a lot to see really. NZ USD triangle, 5-year triangle that might be breaking up, but actually, I don't think there's the US dollar and NZ aren't actually in the US dollar basket anyway, and the Australian dollar and NZ. So we'll see how it goes. But am I still wondering whether we might make that high retest on US dollar and get up to 114.79? Yeah. And if we can get up to halfway there, which is where the current double bottom indicates that we could, well, maybe. We'll see. All right, so let's have a look at bonds. All right, looking at ZB, this had a very bad week. Now, I've got an explanation for this, and I will talk to you about it. But I think there's a message here. Normally, this would be a flight to safety destination, but I think in this particular circumstance, that's not looking particularly promising. And I'll explain why when we get to the bigger picture charts. Now, in terms of ZB, we obviously made the head and shoulder target. On ZN, we made the head and shoulder target. I've got some declining resistance trend lines here, but actually, the target, I'm expecting it to go lower still. And that's because of something I've been showing you every week pretty much, and that is the triangles on the bonds charts. Now on TYX, we're holding the monthly middle band pretty nicely, and we're pretty close to the highs of the last couple of years. And this is a potential inverted head and shoulder forming, and if we saw a strong break up here, then that would actually have a target, the 995 area, which would be a rather scary situation of the 30-year yield having a 9.5 yield, and that of course is what all mortgage and other loans pretty much are based on. Long-term loans, short-term loans, which are on TNX, which should actually have a target in about the same area. What could push that up there? Inflation. And we are potentially looking at the start of a major inflationary crisis. We're also looking at a situation where the US has already borrowed too much money, and the amount of money it's borrowing is accelerating by the month. And if it gets into a serious war which lasts a while, it'll accelerate even further. Now, the last time the US dollar, the US national debt went up $1 trillion was October until it went up again in March. Where it's going up $1 trillion every 5 months at the moment, that may well reduce to 4. This is what we saw in Trump's first term, of course, big tax cuts, major deficits. And it doesn't look like they're going to be shy about looking for more money for the military. They want another $200 billion for Iran. Trump's talking again about increasing the military budget from $1 trillion to $1.5 trillion next year. That is not encouraging. Now, the problem is, if we have an inflationary crisis and inflation goes up a lot, then, well, this is likely to break up. And as I said, that would have a target in the 9.5 area. Is that, historically, that's not huge. It's high, but it's not huge. I mean, we actually spent most of the period about 1980 to, 1977. Yeah, I mean, we basically spent almost a decade above about 6.5 after about 1975, 77. Of course, that was when we had the last oil shock. And I'm wondering whether we're going to see the same thing again. Oil is basically important in pricing everything. If oil goes up a lot and stays up, everything goes up. And we have the potential for a major oil shock, one worse than the 70s here, if things go badly, which is why Trump should never have invaded. Sorry, he should never have attacked, and he certainly shouldn't be invading. Apart from anything else, invading Iran's a nightmare. It's almost 3 times the size of Iraq. It's got very hostile geography. It's not an easy country to invade in terms of geography. And really, you'd need to put an awful lot of troops on the ground and go in, and you'd lose an awful lot of people. For a country which in 20 years is likely to be irrelevant in terms of energy, it's got a strong position to cause a vast amount of trouble now, but another 10 years, that'll be much more limited. In 20 years, it'll probably be largely irrelevant. So the problem, I mean, really, it would have been much better to just wait them out. And just wait for them to run out of money. It's only a matter of time. So, but obviously we're not there yet, and we are where we are. If we have an inflationary crisis, this is likely to break up. Once it gets above about 6 or 7, then I think my 9.5 will be a potential target. What impact would that have on the US? Well, the US has borrowed so much money already that this year, I think the interest rate bill is likely to be about $1.1 trillion. Given that Besant has taken the risky view that interest rates would be coming down, and therefore has not been selling new 30-year yields, new 10-year yields, as the old ones have been maturing. He's also holding an unusually very large amount in short-term treasuries. Now, what this means is that if interest rates go up, an awful lot of that effect will be immediate. Normally, it would be delayed because you sell a 5% 30-year bond, and it's 5% for 30 years. You sell a 3-month bond at 5%, and if interest rates are at 7% next time, you got to roll it over at 7. If it's 9, you got to roll it over at 9. It's a risky strategy, and I think it may not work out well at all. So we're looking at a situation where, if we see this go up like this, the impact on the US could be that the interest cost over the next 2 or 3 years or something could rise potentially as much as the entire military budget is at the moment. That could cause a major problem. We could be looking at a crisis there. This war could cause all sorts of trouble, but it could cause this problem. I've been looking at this for years, and this is the sort of crisis that could trigger this. In terms of where we are, I've got a nice looking rising wedge here actually on the weekly. It's not a triangle, but obviously I'm looking for it to get up to wedge resistance here and then see what happens. In terms of the daily chart, we've got an RSI 5 sell signal, which is now fixed. For some reason I didn't mark that in, but you can see I'm still looking higher. In terms of TNX, again, I've got a big potential inverted head and shoulders here. Is the right shoulder big enough compared to the left shoulder if it broke up now? Yes. Yeah, it is. It's still benefit for another few months of maturing, but it's big enough now. So potentially this is on the table. If this broke up, that would have a target. Am I marked in the areas for that? No. I think this would also have a target in about the 9.5 area. Yeah, that would be, yeah, it would. So again, I'd be wondering about that. In terms of the weekly chart, no current divergence. In terms of the weekly chart again, this is the triangle I drew in, and the purple one, and it's nice. Obvious next target, triangle resistance. In overall context, is this triangle bullish? Yes. Normally it would be bullish, but in this particular instance, it's really just a bull flag. So ultimately, the way this should go is it should head up there, and then it should break up and go back and retest this high at 49.97. What would be happening as we were doing that? We would be testing and breaking slightly over this inverted head and shoulders neckline, and I'd be wondering about a break up. As we are about to potentially enter a major inflationary crisis, this is on my mind. We do have a potential RSI 5 sell signal brewing on the daily on TNX, but again, I'm looking higher within that triangle. This is a smaller triangle which is broken up within the larger triangle. I'm liking it to get there, so I'm expecting bonds to go down. FVX, it's another triangle. Again, target is somewhere above, so I'm significantly bearish on bonds here. And at the moment, every time the war escalates, bonds go down. And actually, that's rational. If the US is about to if the US is about to spend even more money, get into even more debt, and we're about to have an inflationary crisis, the bonds really should be going down. That could be a lot of trouble. Now here, I have this drawn in as a potential inverted head and shoulders here, which didn't really fit with anything else. But I've been playing around with that. And actually, this is also a triangle. Or at least I think so. I've only got, a couple on each side, but actually this is a compression. You could read it as an inverted head and shoulders, but actually it's just as nice as a triangle. And if it's triangle, it's a bear flag. So here, that would likely break down in due course with the target in the 74.52 area. In terms of the daily chart here, we've got a possible RSI 5 buy signal brewing, and I'm watching that, but we've also got a double top here, which is breaking down with the target in the 81.2 area. That's not as far as I would expect the triangle to get. But if we got to 81.2, that would break the triangle to the downside. And the triangle target would be 74.52. We'll see how that goes, but that's where I'm looking at on bonds. That is why this could be such a serious matter, why this Iran thing could go so horribly wrong. It could cause an oil crisis bigger than the 70s. That could trigger an inflation crisis, which could potentially be equivalent to what we were seeing in the 70s, which was caused by a lot of knock-ons from basically more expensive oil and OPEC causing the initial oil crisis just by raising their prices and exerting their power. Effectively, Iran is in the place of OPEC here, and again, it's not really willing to compromise. Now, it may be that the Americans can actually defeat it, but I don't really see that happening without putting troops on the ground. And while Trump has said he's not worried about causing another Vietnam issue, I think he is probably worried about that. I think a lot of Americans are worried about it. I think if he wants to go down in infamy and potentially be impeached, that's the way to go. But I think even then, well, I mean, the Americans have got the most impressive army in the world, and Navy, and Air Force, and that's not in question. They don't have the drone expertise that Trump claims they've got, but nonetheless, they've got an awful lot of expertise. Could they invade, or could a really determined America invade Iran and conquer it? Probably yes. Have they got that level of determination? I'm doubtful. We'll see. All right, let's have a look at oils. Okay, oil. I've introduced a new one this week, and that is Brent oil. And the reason I've introduced Brent oil is because it's much closer to what the Persian Gulf's actually producing. So whereas the US is mainly producing fairly light sweet oils, and I've been watching a lot on this actually. Interestingly, the US can't actually refine most of the oil it produces. It actually refines oil which comes from Mexico, Canada, and Venezuela, which is much heavier. But light sweet oil mainly gets sent over to Europe and Asia to the refineries there, which are better suited to it. And of course, the refineries were all built for traditional sources of oil, which were, of course, Canada, Mexico, and Venezuela. The light crude is mainly from shale. That's all relatively recent. And as I said, it takes a long time to build a refinery, so it's not really worth switching over. But mostly, what comes out of the Persian Gulf is more equivalent to Brent crude. And this is why Brent crude is also it's a bit heavier than light crude, but it's more useful for a variety of purposes, which is why it tends to trade at a premium to light crude oil. But also, it seems to light crude oil has not got back up to the March spike highs and has been subdued, but heating oil has gone way over it. RBOB's gone way over it, and Brent crude has almost equal it. This is what's really happening in the oil market. CL is a bit misleading at the moment. The other thing is that the futures prices seem to have disconnected physical prices, which are higher still. Apparently, Brent crude Brent crude equivalent being sold in Oman is now going at 140 to 160 a barrel. This is going to have an impact. Oil prices at this level for long are going to cause an economic slowdown, and they're going to cause inflationary problems, like the ones, because the last big inflationary problem was around the last oil crisis. This isn't just me looking back at the 70s. We've got a more recent example, and it's very recent. And that caused a big problem. So we'll see how that goes. In terms of where we are now, haven't got a lot in terms of divergence here. This I don't believe at all, but we've got a potential double top here. It's just I think we'd need some good news, and I'm not really seeing a lot at the moment. We've got a potential of little level tops. We could see some reversal here, but let's move on to the bigger picture charts. Okay, looking at Brent crude, because I've done all of the charts here, so I've charted it on all timescales. I never actually paid much attention to this because I wasn't really sure how important it was, but it does appear it is important. And for this crisis, it's very important. Okay, Brent. Brent, we had a double bottom here, like the one we had on a couple of the others, and that is like the one we had on CL, for instance, and that has broken up with the target, the 103.46 to 104.08 area. It made that, and it's since gone significantly higher. This is the March 9th high. This is where it is now. So I think this is it's not quite sure why this is, but remember this is spot, not the futures price. But this is what spot's actually doing, and this is going up to towards 115, and this is again as a decent argument that this was a bull flag, in which case it's got a good chance of getting back to 134.91. And like crude, that's not the all-time high. Heating oil, gasoline are both made their all-time highs in 2022. In terms of the all-time highs on Brent and WTech, we saw those highs in 2008. The crude one, CL one, is at 147.50, and the Brent one is at 147.50, and the WTech one is very close at 147.27. It doesn't appear it was trading at much of a premium then, but it was trading at quite a premium now. The flags, though, only goes back to the first targets, which are the 2022 highs, and I'm pretty confident this is going to be there within weeks. So that is at 134.91, and I'm expecting to hit that within 3 to 4 weeks in all probability. On WTech, that target is up at wait a second, 126.42, and again, I think we'll hit it in weeks. In terms of heating oil, this was the all-time high that was made in 2022, and we've already gone beyond it. This has significantly more than doubled. Just as well, it's not winter anymore. Gas oil, this again, all of these are arguably flags, and the gas oil target would be a retest of the all-time high in 2022 at 412. And again, I think it's going to be there in weeks, unless peace suddenly breaks out, the Iranians start really wanting peace for some reason, or maybe they stop getting religion, or there is a sudden collapse. I mean, it's a bit like, the regime is not a well regime. It's not popular with the people, but it's a bit like having a long extended terminal illness. Just because you're looking unwell doesn't mean you're about to die. And like I have heard some of these terminal illnesses being a long drawn out illness, and then the death is sudden. But that death could come in terms of the Iranian regime, and it would really bail out everyone and be a great thing for the world, because certainly they're a bunch of psychos. But I'm doubtful about that happening. If it happens, it will be a very pleasant surprise, and it would mitigate a lot of this stuff, and this crisis would be over better in a much less time than it would be otherwise. However, every time Iran hits something like the Qatari stuff that was hit the other day, that is, you're talking about a multi-year major repair job. If they start hitting multiple facilities like that in Saudi, then we could well be seeing an oil price rise that heads up to 100 to 150 and stays there for years. Then, that would be a different world we were looking at. In terms of the weekly charts, daily charts, we've got possible daily RSI 14 and RSI 5 sell signals brewing on heating oil. I think we might need some good news for those to deliver, but I've got the same on heating oil and on gasoline. I don't have the same on WTech or Brent, because neither of those has retested the high yet. We will see, or done anything suggesting that we might do that soon. We'll see. But natural gas hasn't really had. Look at this. This is the current month. This isn't a significant response. And natural gas, which tends to be a pretty bit of a wild animal anyway, this is barely moving the needle. We do have potential inverted head and shoulders here, which I am watching, and potentially we could see a move up. But at the moment, there's really nothing to see. Could that change? Yes. An awful lot of natural gas is piped and doesn't go through. I mean, when they're talking about 25% of the world's liquefied natural gas goes through the Persian Gulf, then that is missing the fact that an awful lot of the world's natural gas is not liquefied natural gas. It is it is not compressed and frozen and shipped. It goes through pipes. And I mean, for instance, most of the stuff that Europe uses is that it's trying to switch over to liquid natural gas, but it hasn't done so with great confidence yet. And of course, by the time it's ramping that up, but of course, it's also ramping up the amount of solar and wind it's doing, and that really ultimately is likely to be a larger source of energy. All right, let's have a look at the metals. Okay, GC. GC, well, normally in this kind of war, you'd be looking at this as a flight safety destination. Obviously, that isn't happening here either. But what we are seeing here is what I was talking about on the bigger picture charts, which is I thought we were forming. I don't think the bull flag is over. I think we are forming a flag. And I was thinking we would do a lower low than this low here. And I was talking about a target in the 4,300 area, which we've almost reached. Now, I'm going to have a look at this on the bigger picture, but SI has made a very marginal lower low just. But I'm thinking probably goes a bit lower from here. Palladium has gone lower already. This already is looking like a credible flag. GC is already looking like a credible flag, but I'm not really seeing the trend lines yet. In terms of platinum, this should make a lower low too. It's almost there, but not quite made it. HG has made the lower low. This triangle made target. Lovely triangle, made the target at the retest of this low, has gone lower. I've got a 6-minute buy signal at the moment, but it's not really doing a great deal. And all of these were heading down last week when things were getting frisky in Iran. Let's have a look at, sorry, hang on 1 second. All right, let's have a look at the big picture. Okay, I'm looking at gold. We've got obviously quite a lot of big signals here. We've got a weekly weekly RSI 14 cell signal here. These do have a patchy track record, but they do have a track record. I've got 2 which made target here, 3 actually. I've got 1 failure. So this one, yeah, so they're okay. Here, these have a better track record on the RSI 5, and that one just made target. So we've got. Hang on 1 second. I'm just going to adjust that. Sorry, I just obviously got distracted halfway through. That is RSI 14 cell signal. Let's fix. All right, we've got an RSI 14 cell signal fixed. That might make target, but we would need to go significantly lower to do it. What I was thinking would really definitely make target, or very likely would make target, was the RSI 5 cell signal, and that has made target. All right, let's have a look and see how that looks on the daily charts. No current positive divergence. We've got down lower here, but here, I'm not seeing that 4,300 here. I'm not quite sure why that is. But again, this is gold spot. What I would like to see, ideally, I was looking at the ideal trend lines that we would get to, and my favorite is here in about the 4180 area. So I'd be looking lower, and by that stage, ideally, we would be setting up some positive divergence on the daily chart. And ideally on the weekly chart too. Looking at silver, silver, I'm looking for a lower low. I'm looking for a flag. The RSI 5 cell signal on the weekly has reached the possible near miss target. We had a whole rash of these cell signals across the metals, and these have all been delivering. We're about halfway there on the RSI 14 cell signal, but I'm not too worried if that doesn't make target. I've only got 1 of these on the charts so far, and that did make target, but not really a statistical universe. The RSI 5 one was the one I was mainly watching. We get quite a few of those, and they generally make target. In terms of the daily charts, no current divergence, a bit oversold for sure. But and here we haven't gone lower than this. What is that exactly? Hang on, sorry, I'm just going to check something here. That. Okay, right. That is right. Okay, we've got to sit low here at 63.99. We haven't gone below that yet on this chart. And here I was drawing in my ideal model flag support, and I've got that in about the 58 area. So really, that's what I would like to see. It's also not a bad back test of this high here. So it's a reasonable area to be looking for a low. So I'm still thinking we probably go a bit lower. Again, if we get down to those targets, then I would love to see some positive divergence on both the weekly and daily charts, but at least on one of them. Looking at palladium, again, RSI 14 and RSI 5 sell signals fixed on the weekly, and the RSI 5 sell signal has made target. Here, I was looking around for where I'd be looking for a flag, and really, we're pretty much in the zone already. I'd quite like to see the support level here at 13.29 hold. It might get tested, but I'd prefer not to see it broken. This has been seeing a heavier decline from the high than the others. In terms of platinum, we've been seeing a stiff decline from the high. In terms of the weekly charts, we had a weekly RSI 14, weekly RSI 5 sell signal fixed. The weekly RSI 5 sell signal has reached the possible near miss target. So I've not been as thorough updating this week, but I was working on the new oil charts. RSI 14 sell signals reached the halfway point like gold and silver. In terms of a flag, I didn't really have an ideal flag area here. I couldn't see anything particularly obvious. But a bit lower would be fine. Ideally in the zone for a backtest of this high here in the substitute 47.40 area. We will see how that goes. In terms of copper, you can see here, we had I was wondering whether this is an overthrow here. Now, this isn't a precious metal. I wouldn't expect it to go back up with precious metals. And really, if we're going to go into an economic slowdown, then, well, this may be dropping a lot. We're testing the 200 DMA at the moment, and if we get through that, well, the obvious target would be this trendline support in the 4.25 area. We'll see whether we can get that. In terms of GDX, RSI 5 sell signal on the weekly made target. GDXJ, the RSI 5 sell signal on the weekly made target. In terms, we do have some topping patterns here. We've got some positive divergence here on both the RSI 14 and RSI 5 on GDX. We've also got a double top, which is broken down with a target in the 57.18 to 76.6 area. We will see how that goes. In terms of, that's wrong. Yes, that is wrong. Sorry, I entered that incorrectly. Sorry, I was obviously being a little sloppier than usual this weekend. That's actually a target in the 67.18 to 70.66 area. So I think it's got a decent, looking at the others, I think that's got a decent shot at making target. On GDXJ, we've got another one that's broken down with a target in the 84.35 to 89.6 area. And I think it's got a decent shot too. We will see. We will see whether those make those target areas. But in terms of where I would be looking for gold and silver to go, I think they've got a shot. We'll see. All right, great. Let's have a look at the other commodities. Okay, KC. Made the double bottom target at a stage where I was really wondering about that. It still kind of looks like a bear flag forming, but it could be starting to break out. We will see. SB has broken out. We made the IHS target. We made the first target. We made the extended target. So looking impressive. The last week's sell signal, the last 60-minute sell signal failed. I've got a possible next week 60-minute sell signal brewing. Not quite sure where this is going up. Might be that fertilizer issue again. On CC, this still looks like actually at this point this looks like a bull flag forming after this initial move up. Wondering about that. Might just be for a retest this high in the 3,500 area. On CT, we're seeing a bit of a retracement here. No particularly obvious topping pattern here. We'll see how that goes. But I'm quite liking a reversal back up in the not too distant future. Lumber, possible. We've got a weak 6-minute sell signal fixed, possible little level top here. Wondering about a bit of a pullback, but not seeing a pattern which would suggest anything much larger. Wheat, I think we've probably got a bull flag forming here, but it depends on the situation with fertilizer in the Persian Gulf, I think. The weak 60-minute sell signal has reached a possible near miss target. Waiting to see what develops here. On corn, I'm wondering about a flag or a bullish triangle forming. 6-minute sell signal is fixed but hasn't reached the target yet. Soy looks like a bear flag suggesting lower. We'll see how that goes. All of these and cotton, I'm going to be doing a post about that in the next couple of weeks. I'm going to be researching which fertilizers they use, but they all look so far as though they may all be affected by the potential fertilizer problem There's also a helium problem. No idea what helium is actually used for, but apparently there's helium. A lot of helium comes from the Persian Gulf. But the other main thing is fertilizers. This could cause a significant spike in foods. Of course, that wouldn't help with inflation either. ZL, this looks like a bull flag forming. Live cattle, this looks like a bull flag which is starting to break up. And lean hogs is having its other leg down without live cattle. I'm leaning towards it going a bit lower. We've got a possible weak 6-minute bicycle ring, but the last one failed. Ideally, in terms of a flag, we need much lower, maybe 103.75, but a bit lower. We will see. This looks like an overall bull flag forming. All right, great. Let's have a look at those on the big picture charts. Coffee. Nice weekly candle up here. Nice rally off the low. We have almost made target, but not quite on this double top. We've reached a big support level here, and at the moment it's holding that. Could it go higher? Yes. Could it go a lot higher? No, I'm thinking we're still probably in a reversion to the mean. We will see how that goes. In terms of divergence, we have none. In terms of a pattern here, not really seeing it on the futures chart, but actually there is a pattern here. I'm just going to draw that in quickly. And that is here. Actually, that's quite nice looking. That's quite a nice looking little inverted head and shoulders there. And let's just draw in the arrows for it. Because the watchword for this is as above, so below, or as below, so above for an inverted head and shoulders. You just measure the amount from the basically to the middle. So from the low, you measure it up to the neckline, and then you have another arrow the same size, and you put that on, and the target would be at about the 3.32 area. I think that's got a pretty good chance of making target. It's a nice pattern. I'm not seeing any reason to think it won't. So we shall see. In terms of sugar, we've got an RSI 5 bicycle which has fixed, and this could be the big head and shoulders here starting to fail. Not taking that to the bank yet, but I am wondering. So this head and shoulders, it would need to get over 23.71 to fail the head and shoulders though. That's a long way away. In terms of the weekly chart, we've got a weak RSI 14 bicycle which is fixed and is heading towards target, and I've got possible wedge resistance up here in about the 16.3 area, and I'll be watching that for resistance when it gets there. No current divergence on the daily chart. Is this a double bottom breaking up? Arguably, but it's not a nice one. In terms of cocoa, we managed to get down. When we got down to this area here at 3,000 area, I was saying we were back in the traditional stamping grounds of cocoa, and I was wondering about a rally. We've seen that. Sell signal has reached possible near miss target on the monthly chart. On the weekly chart, we've got a weak RSI 14 bicycle fix and the weak RSI 5 bicycle already made target. Could this be bottoming action? I'm skeptical, but I'm certainly thinking it might stabilize. In terms of cotton, wheat, and corn all have very nice looking double bottoms, which I'm wondering if they're going to break up on the potentially because of the fertilizer issue in the Gulf. And this could explain, because this is something I was talking about a few months ago. I was saying that we might find the wheat and corn were two of the big winners this year, but I couldn't actually see a fundamental reason why that might be the case. Now we've got one. We've got a lot, and it does appear that wheat and corn both use these fertilizers, and that costs have already gone up enough that people are considering not planting. Not in the US, I'm talking about in Europe, but the effect will be much the same in Europe, I would have thought. Sorry, in the US as well. So we will see. But if cotton actually breaks up from this double bottom, this can have a target in the 87.62 to 88.13 area. In terms of wheat, sustained break up could have a target in 739 to 742 area. These are big moves. And potentially, if this war doesn't get resolved quickly, this is what we're looking at. And here I've got a possible double bottom that on a break over 504.50 would look for a target in the 624 to 640.25 area. Remember, you don't have to rewatch the video if you want to see this. I've in the charts I provide with these videos, these are all in the what I send out to members. All these charts are included. But I was drawing all these up this weekend, and these are what I think could be the big, well, beneficiaries is possibly the wrong word, but these could be the big movers on the issue in Iran. In terms of lumber, we've still got a nice bear flag. We've still got a really nice setup. It still hasn't broken down. In terms of soybeans, I don't have a bottoming pattern here. We could develop one. We could pull back right here and make a right shoulder. For an inverted head and shoulders, that could take us higher. But at the moment, we've just got the initial bear flag, which broke up, and we pretty much made the target for that. I'm wondering about a possible inverted head and shoulders here, and we will see whether we get it. But if we do, then that could actually set up a pattern which could be equivalent to what we're seeing on the others. Hang on, bear with me a second. So that is a potential inverted head and shoulder neckline. Form a right shoulder there, and we could be good to go. We shall see. All right, great. Let's have a look at the cryptos. Okay. Looking at Bitcoin, we are still basically on all of them. I'm still looking at the same bear flags. I was looking at these with as bearish overthrows, and at the moment we're getting pretty close to flag support, which I've got currently in about the 65.5 area. Hang on, a better view on this. I've got those in about the 65.6 area. So that is where the support is, and that is where I'm expecting it to go. We had a 60-minute buy signal on here. I was watching that with great interest. It fell. We've still got buy signals. We had buy signals on Solana and Ethereum as well. We've still got those in play, but we will see whether those deliver anything. And Bitcoin is the big dog. So if the Bitcoin ones failed, that weakens the others significantly. In terms of the flags on the others, let's have a look at Solana. All right, Solana, we are now breaking down from the flag. I was talking to a friend of mine who's a crypto trader, and he was saying, oh, well, it's breaking up, etc. when we were here. And I was saying, oh, well, actually, I'm not sure that's the case. But this is actually a very nice bear flag here, the nicest of them, and this is actually already now broken down. That is encouraging news. I'm thinking I would like to see this go back and retest this low and potentially make the second lower double bottom there, or just set up the tracks to go lower still. We shall see. This is a messier flag on Ethereum, but it still looks like a flag, and I've got a target for that in about the 1880 area, I think. And it hasn't reached it yet, but it's very encouraging that Solana is now breaking down from the flag. We shall see. All right, great. In that case, I think that's a wrap, guys. I will catch you guys again on Wednesday. Sorry I've gone a bit long today, but I just wanted to talk about the Iran war and why I think this could really go south in a very, very bad way for everybody, except possibly longer term for the Iranians, who at the moment are looking. I mean, all the ignoring all the obviously successful bombing missions of which Trump has been talking, etc., etc. What really matters here is whether the Iranians can survive the attack, and if they can survive the attack, how much havoc they can cause in return. And at the moment, they're surviving the attack, and it does look as though they could cause an awful lot of havoc. Be warned, things can get ugly. So that's why I was talking at length today. We shall see how it goes. All right, cheers, guys. See you Wednesday.